The story of the morning from Wall Street is a rally, a big rally. Dow is now up 900 points. It had been up 1,000, okay? The Nasdaq is up 588. That's still 3.25%. Lost a little bit of the rally, but not much. Still a lot of green. Jeff Sica with me this morning. This is a huge rally, any way you slice it. Does it have legs?
I think it does, Stuart, but I think that the market is always looking for things to worry about. Keep in mind, I mean, we're still dealing with a market that, even though it pulled back, it rebounded substantially. And people like myself have felt that there was a lot of froth in this market. I think the market was under the curse of high expectations, the concerns over tariffs. We have to realize that there is a flip side to the trade agreement. And that flip side is the U.S. economy and most specifically interest rates. Interest rates are still a problem. They're still too high. And what's going to happen with this? So let's just enjoy the rally, crack the champagne. Nothing is forever. And I think it'll pull back, but it'll continue from there.
Now, you were hot on gold for quite a long time. And today, gold is down nearly $100 an ounce. Have you lost faith in the magic metal?
No, Stuart. As a matter of fact, I can't wait to run out of here and buy some more gold, because I still think that this is a response, because gold was being used as a hedge against the geopolitical tensions, the economic tensions, against the ultimate result of tariffs. So people were running to gold as a safe haven. Now it's pulled back, but here's what we have. We have central banks that have been buying exorbitant amounts of gold and stockpiling it. That hasn't changed. That is going to continue to accelerate. So I think gold is going to exceed 3,500. I think it's going to stabilize. Any pullback should be used to accumulate more.
So you're a skeptic on whether this stock rally has legs, and you're convinced that gold will rebound to hit new highs. That's your position this morning?
Yes, because a lot of people are celebrating the trade deal and I've said it on the show, and I think it's definitely historic. It's an historic agreement. But I also think it was not unexpected as far as I was concerned, because this was a war that we were destined to win and will ultimately win. So the market, buy on the rumor, sell on the news. We have a lot of that. I think people should be very cautious about chasing some of these technology stocks, because I think some of them have rebounded a little too much. But let's face it, it's a great thing. It is historic. I think if the Chinese follow through, here's what we have to be aware of. They don't have a good track record of keeping their word, and they don't have a good track record of sticking to an agreement. So assume some back and forth before this becomes something we could have ultimate confidence in.
Unless there is a catastrophe, this market is not going to go back to the April lows, is it?
No, I don't think so. I think the April lows were after an inflated market, and there was a lot of fear in the market. I think a lot of people had instilled this fear, and I don't think that exists. I think we're in the best place economically we've been in a while.
But you are advising us against exaggerated enthusiasm. What was that expression?
I'm just advising everybody to just keep a cool head and realize that there was the curse of high expectations. We were overly allocated into those technology stocks. Don't pile into them because everybody else is. Be cautious this time. Maybe go in a little bit slower. I mean, to me, I love rallies, but I love pullbacks. So when the market does poorly and everybody's petrified, that's the heyday for me. Okay. So I look forward to those days, because there's value.
Okay. Jeff, you've made your point, and we take it. Thanks very much, Jeff. We'll see you again soon.